It is earnings week. We have a lot to look at, so let's get it on. All right, this is fun. I got my stream deck all set up finally, so I can go from scene to scene. But what we're here to do today is check out this crazy, wacky market. I do believe we are pretty much flat on the day, or so we were. It is lunchtime, midday in the market. This is earnings week, so I have a lot of assets, stocks that you might want to look at. We're going to compare and see if they have any dividends, what their 52-week high and low is, and maybe the projection out. Although a lot of folks, CEOs, owners, are not doing any guidance in the market because of the uncertainty of everything. But we're going to look at it anyway, see what we come up with, who's out there, and possibly some sort of legacy that we can get into. So let's go ahead and get into the market. Now, of course, the first thing I'm going to do is I'm going to try my banner here. And here we go, day by day. I should have put earnings up there, but it is a day by day look at the market and being aware. But more importantly, I need you guys to know that we are here to build a legacy, one investment at a time. As well, the disclaimer, which lets you know that this market is super risky, and we're going to start off looking at the VIX. It is a risk reward venture on your part. Although we're not day traders, we're trying to find and build a legacy for ourselves, our supplemental retirement income, and even for generational wealth moving forward with our portfolios. If you do want to do this, you want to seek out a professional, a certified professional accountant or financial planner or somebody like that, and even a broker. All right, so now that we have that all set up, let's move on and see what we got going on here in the market. All right, so there's a lot of things going on. The market is sliding up, it's sliding down, it's sliding sideways. Today it is pretty flat, but this week from April 8th until 9, 10, 11, April 29, 30, 31, 30, till April 2nd or 3rd, something like that, from Monday to Friday, we have a lot of earnings going on. Some happen before the market, some happen after the market. Most of the big names will happen after the market, and that's probably a good thing because doing it before the market, you have a whole day to just show everyone that you're crashing. That's my take anyway. All right, but I think we should just go ahead and get right into it. So let's go straight to our earnings chart. Here you go. We got some big names coming up this week, and I'm going to throw a few of them out there to you. We're going to be using the Tastytrades brokerage platform chart, which is very cool. It's going to give us a lot of information. Even companies that I don't know what's going on, or I have no idea what their profile is or their financials are. You can find that information all on the brokerage platform. So you got Waste Management, Nucor, Teradyne, Welltower, Transocean, which is RIG. Then you have Tuesday, SoFi, Visa, PayPal, Starbucks. We all know Starbucks. UPS, Snap, Royal Caribbean, First Solar, JetBlue, Coca-Cola, Pfizer, Spotify. These are the names we know. Microsoft, Meta, Robinhood, Qualcomm, Western Digital, if you bought any hard drives. But that's, of course, not all they do. Albemarle. And we're not even going to touch energy, gas. It goes from the high 50s to the low 70s, but like the bat said, at the pump, the gas prices just seem to stay the same because they're just as uncertain about, changing their prices being, part of the game of basketball. Lilly, Roblox. I think we all know Roblox and CVS, McDonald's. Pretty out there stock. MasterCard, Sirius XM, Moderna. We're going to take a big look at Moderna. Amazon, Apple, Riot, Reddit, Airbnb. I didn't put any of these into the watch list that I did create before I started this broadcast because, we'll look at them later in the week. Fubo TV. We'll look at the oil stocks later in the week, like as far as Hex, Exxon, Chevron. So let's go ahead and let's go to the charts, as they say. The first thing I want to do is look at the VIX and see where the market sentiment sits. For the last couple of weeks, it was up between 40 and 30. And like I've said before, the higher the VIX, the more cautious and risky the market is, and folks are kind of timid. The lower, like 12% or 18, then it's okay. If it's complacent, it's flat. So let's see what it is. And I'm gonna go over here to the chart. Well, I was on the chart. Here we go. VIX for the VIX. And market sentiment right now is pretty, average to where it's been over, I'd say, these are 1 day candles over a year. So if you look here, let's see, April 7th. I mean, was that Liberation Day? Oh no, that happened April 2nd. But shit hit the fan. And people were like, wait a minute, this is crazy. So the market sprung up right down here. Let's see, what day is this? This is the 31st. People are wondering what's going to happen. April Fools. And the 2nd, now we're down here at about 23. And the reason why it's still not low is because there was a lot of talk about the tariffs and what would actually happen. And then when it did actually happen, the sentiment on risk in the market just went up. And of course, the Dow, the S&P, the NASDAQ, the Russell, they all saw the next 2 weeks plummeting. But now we're back down here. I think we've kind of settled in. And but we're still high. If we're talking about a regular market, it would be down here somewhere between 15 and I'd say 18. Anything under 20. But anyway, that's the VIX. So I set up a chart, and these are my own charts that I've actually put together at some point in time. And you, on this platform, you can make as many watch lists as you would like. So I've done the biotech, the currency options, the Dow 30, like what are the stocks in the Dow 30? So I put them all in there. These are the Dow 30 stocks. Now, mind you, this was a while ago. Some of these stocks might be in or out of that uh, index. And gaming stocks I put in there. Some of them might be missing. I haven't been back to those. Gas, oil. I set up a watch list for that. So I'm able to go through here, click on that, and see what the oil stocks are doing. But for this week, I went ahead and made a chart for our earnings. So we're going to look at a few things. Like I said, we're going to look at the 52-week high, the 52-week low, the implied volatility, which is the stock measured against itself over a year's time, the higher the volatility, that kind of gets into options. But I won't go there. Whether it carries a dividend or not, if the dividend is quarterly or annually, and what else are we going to look at? Are their earnings going to be before the market or after the market? And its liquidity. And if we don't know anything about a stock, we do have here on the platform called Research and News. So if I go over here to Waste Management, and I'm able to just click on it. Right here, right after activity, I can go to Research and News, and it'll give me the news of the day on what Waste Management is doing, what their projected earnings per share will be, and their conference call, their financials, what the ratios are compared to price, volume, income statement, return on investment. And then if I had no idea what Waste Management did at all, I could just click on this, and usually in the first sentence, it'll let me know that it is a provider of environmental solutions, like the truck that comes that picks up trash. It provides collection, recycling, and disposal of services to millions of residential, commercial, industrial, and municipal customers throughout the United States and Canada. How about that? All right, so that's what we can do here in research. And let's go ahead and go back to our chart. So right now, the going price for Waste Management, and it's not that expensive. It's $227 per share. If you have a nice, solid portfolio, it's not one of those tradable stocks because it's a value stock. Value. So the liquidity is only 2. It does carry a dividend of 0.82 cents per share. The dividend did happen on March 14th, 2025. Definitely a dividend can go up or it can go down, and it normally reflects what the price of the stock is doing, how many shares are out there in the market, and if they can afford to pay that dividend. And this is what you want to do as far as adding value stocks to your portfolio for a legacy and for a supplement in your retirement portfolio. So if you have enough dividend stocks in there with enough shares, you can live off of that or have that supplement your retirement income. All right, so let's look at the 52-week high and low. And that is over here. Where am I looking? There's Ivy rank. Here we go. This is on the day. Oh, here we go down here. Okay. Here is the 52-week low at 196.59, and then we have the high at 239, and the price is sitting at 227. So it's almost up here at its high. So the last time it was at the top of the year that Waste Management was closer to its low. Right now it's closest to its high. Good stock. Good stock to good asset to put some money into. Okay, that takes too long. It took too long. The next one I know for sure is Nucor. And let's take a look at Nucor. Nucor does have a dividend, and their dividend is 55 per share, and it showed up on the 31st of March. Good stock to sit at. And what does Nucor do? Let's take a look. Manufacture of steel and steel products. Now, are we having a tariff on steel from other countries like Canada, Mexico, or something like that? So I guess if you want to keep steel in your portfolio, you might want to invest into this. But they do have operating facilities, and this is something you might want to look at in the United States, Canada, and Mexico. It also produces and procures other things for ferrous. I don't know what that is. Type of materials for use in manufacturing. Steel mills, steel products, raw materials. They are based in Charlotte, North Carolina. So it is a U.S. based company. However, they do operate outside of the United States as well. So, how much steel we manufacture here in the United States, I do not know. It could be 1/3 here, 1/3 Canada, 1/3 Mexico. However, I guess we're going to be building manufacturing infrastructure here more, possibly, depending on where things go. This stock, NXPI, I have no idea what that is, but I put it in. Okay, so I did put it in my portfolio, and it is semiconductor in the Netherlands. It's based in the Netherlands. Okay. The company operates as a semiconductor company. The company provides high performance mixed signal, analog, digital, or AD products. Let's look at the chart. Then again, it has a dividend of 101. It is not a U.S. based company, just so you know. It does its 52-week low is 148 and change. High is 256. And right now the stock is sitting at, wow. I'm sorry. Did I say 256? Yeah. 296. Sorry. So it's sitting at 191. Let's see over here. In February, I guess this was all before Liberation Day. Let's look at what Liberation Day did to this stock, which was April 2nd. Yeah, it plummeted. But because everything has been so uncertain, you know, it went down, came up, went down. So they have earnings today after the bell. Semiconductor. F5. I am actually not sure what F5 does either. The stock right now is sitting at $264 per share. Its 52-week low is 159 and the high is 313. So it feels like it's sitting right in the middle or a little higher than the middle. The liquidity is super low. If you're going to do this stock, then you're probably going to put it in your portfolio. But why? It has no dividend. And what does this stock do? I'm going to go to my research and I'm going to find out. It's a multi-cloud application services and security company. The company provides partners with various organizations to secure and optimize every app and application programming interface API on premises, in the cloud, or at the edge. I would not be interested in that stock. There are plenty of cloud stocks out there. So we did Nucor. Teradyne. There we go. And let's look at Teradyne's chart. The IV rank compared to itself is 56. This would be a good options play. The stock price is at a good price. It's 75 and change per share. It does carry a very small dividend that's already placed itself February 14th of this year at 12 cents per share. It does show up after the market today. Anytime the greater than symbol is on the other side of the bell, it's after the market. And of course, the less than symbol is before the market. So pretty much everything that I think so far that we've looked at is after the market. I didn't do dominoes. Let's look at that real quick. That happened before the market. Let's see. An MGM. Let's see what happened to Domino DPZ real quick. Let's finish this up real quick. This is 52-week low is 65 and change. High is 163. It's setting at 75, so it's closer to its low than its high. So Teradyne might be something to look at. It does have a very small dividend, but that's okay. Let's look at our research. It's a global supplier of automated test equipment and robotic solutions. Well, now robotics is something that's going on. Designs, develops, and manufactures and sells automated test systems and robotic products. And the company is located in North Reading, Massachusetts. So it is a United States-based company, if you're interested in that. And let's go back to our chart. I want to put in DPZ for Domino because they performed before the market. And once again, if you look over here at the bell, there's the less than symbol. That means it did report before the bell. Let's see. Right now, it's down about a little less than 2.5. The stock is $485 per share. Wow. The low is 396 and change. The high is 542 and change. It's got a nice dividend. It's an expensive stock, though. That's what I'm talking about. The more expensive the stock, seriously, unless they don't give you a different dividend at all, they're confident about their return on investment, and or they're not confident. I don't know. Domino's has been around for a while. They did do their dividend on March 14th, so that's passed, but at $1.75 per share. That's not bad. Um, Quarterly, annually, I'm not sure. I have to find out. Um, so uh, if the stock is down, I don't know if it beat its estimate. I'll have to look back at that. But I just wanted to look at Domino's real quick, and I want to look at MGM because I did want some MGM, but the stock is just not doing well. 32 and some change per share. Uh, the 52-week low is 25 and change. High is 47 and change. It's got a 3-star liquidity, so it's tradable. But if I were to do MGM, I would get 100 shares of MGM and place covered calls on this stock, or do some verticals, some short verticals, or even do a short put on the stock, because sell some premium and hope it goes up, and take your profits you know before expiration. That's what I would say as far as an option play would go. But having 100 shares of MGM, I don't know. And I'm getting off base here, but let's look at Las Vegas Sands since we're in that category. Same thing. Las Vegas Sands at 36. And let's see. Its low was 30. Its high was 56, so it's a little bit more than MGM. But it's sitting right just above its low, so it has time to run. So you could do a short put on that, projecting that the stock could go up maybe a few points and get out before expiration. So you make a few bucks. I don't know. Or get 100 shares, do some covered calls on, a month-to-month basis or a week-to-week basis, depending on how you want to run. All right, let's get back to the real deal at hand. We're not going to be able to get through all of these because we have about 3 more minutes on the chart. But I do want to let's look at some of the big names here. UPS is one. Coca-Cola, we all know Coca-Cola, right? Let's look at Coca-Cola. This is not bad. The 52-week low is 60, high is 74. It's highly liquid. So it already had its earnings, and it probably didn't do too well. But I mean, it's only down. The change is only 33 cents. It's not that big of a change. A lot of folks, summer's coming. Boom, seasonal drink. Even though you shouldn't be drinking Coca-Cola, I call it battery acid. And I should keep my mouth shut because I drink Red Bull here and there. Anyway, it has a dividend. 51. This is Warren Buffett's favorite drink and favorite stock right here, Coca-Cola. What are the other big boys? We know Roblox. How about McDonald's? Expensive. Coke is on the 29th, so that's tomorrow, and that is tomorrow before the market. Oh, okay. So it hasn't. I'm thinking it was today. All right, so that happens. Coke happens tomorrow morning. What else do we know happens tomorrow morning? Well, we know UPS. Let's look at Starbucks tomorrow after the close. So let's go to Starbucks. Wow. All right. So 52-week low is 71. High is 117. That's just over a year's period. We're not talking about 5 years ago or 10 years ago where Starbucks was. And before I end this in the next 30 seconds, I do want to show you what Moderna looks like. That was the 2020 stock, 2020, 2021 stock of those years back then. Um, it's average liquidity. It does come with a dividend. Starbucks does, not bad, 61 cents per share. Their dividend is coming up, so if you want to grab a few shares of Starbucks, that'd be great. 100 shares of that, and you can place a cover call on that at $83 per share, maybe 84. We'll see after the market and see where we want to place. See if we want to buy 100 shares of that the following day, because we after earnings we give a stock a couple of days to settle to see where it's gonna go. Whew, thank God that's over. And that's what I say every earnings season when all of them finish giving um, uh, their balance sheets. I go, phew, thank God that's over. Okay, now let's look at blah, 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 blah. But now I'm looking differently because I don't just want to throw play options out there because the market's too wiggly waggly. I want to look at the dividend stocks. I want to look at placing, uh, more stock in my portfolio, um, long stock, and getting dividends and putting on covered calls, that sort of thing. That's how I'm working my portfolio. Okay, so before we go, I know we have a lot going on, and Moderna doesn't show up until, where are you, Moderna? Let's go here. Oh, until May 1st. So Moderna doesn't show up until here. And it's before the market on Thursday. Nothing normally happens after the market on a Friday. And nobody wants to go into the weekend with the market closed. But, okay, look. Moderna is $27.39 per share. That's cheaper than Gilead, cheaper than Merck, cheaper than Pfizer. These companies, these pharmaceutical companies have been out for a while. And I'm going to hit Merck first. Merck is at 83 compared to 27 Moderna. Pfizer. Oh, well, okay. Pfizer's been around for a long time. I don't know. Pfizer, when do they come in soon? That's tomorrow. Pfizer was one of the big three, I believe, that was in the 2021 classification. But okay, so Pfizer's cheaper than Moderna, but it's been around for years. And then you have, did I do Gilead? Then we have Gilead, which is at 104. Interesting, because back in the day, Gilead was the stock that was going down. What did they do? Somebody just came out with a new drug. I am so resistant to doing these pharmaceuticals because I see their commercials enough. But this is what I wanted to show you. Let's go back to Moderna. Where are you? There you are. What I did was this. what we're looking at is a year-to-date, 1-day daily chart, right? So I'm going to go 5 years back. I'm going to pull up a 5-year chart. All right. Now this says nothing. Okay. From 163 to 27, that's still a big dip. And what's the date on that? Date on that is last May 24th. So May 24, 2024, the stock was at 163. So it's taken them almost a year to come down to $27 a share. But check this out for real, guys. Hold on. As I scroll back in time, I'm scrolling back in time. All right. So here I am. Let's see. I'm at 2022. Okay. And I'm going to scroll on back in time. Oh, look at that. I can't even see where that stock is. But I can just drag my mouse. Now, this is daily. I can just drag my mouse along. Here is Moderna down here at, look at that W. Here's Moderna down here at 121. Hold on, let's keep going. They IPO'd somewhere down here. Let's keep going. All right. So here is July 16th, 2020. All right. So let's bring the chart up just a little bit so we can see what's going on. All right. Here's what's going on throughout 2020. This is the stock, Moderna. And it was in competition with a lot of the other stocks. Now let's move forward. Let's keep moving forward. All right, so this stock has gotten so high, I have to bring my chart back down. And there's got to be a gap, plenty of gaps in here, where this stock is just gapping up. Look at this. This is outrageous what this is. The number one on the market at $411.50 per share. Let's see, where did it close? $484. My mouse is on top of that. And 47 cents at close on August 9th, 2021. We were deep in the woods. We were trying to get it together. And then I'm not sure what happened here on the 11th. But it was a lot of profit taking. Somebody made a whole lot of, excuse my French, fucking money. Right? I've gone way too long. But I had to show you this. I had to show you this. Now, when does this stock start leveling off? And this is what I'm talking about. You guys, you know, when you see something like that happen, especially and I would almost consider this a meme stock at this point, unless we have another one of those things that happen, you know, that drives the world crazy. But it was the number one. Wait a minute, who was the other one? Was it Procter and Gamble? Oh no, it was Johnson and Johnson, I believe, was the other one. I believe it was a Johnson and Johnson stock. There were 3 of them out there that competed with one. AstraZeneca was one, I believe. It's like 4 different companies out there competing to get that drug on the market, to get folks squared, right? So let's go ahead and let's go back to. So see, now we've lost elevation. Now we're down here. You still had some good profit if you got in early, right? Let's keep moving forward. Still got some good profit. I'm still seeing peaks, but I'm starting to see valleys. So let's keep moving forward. Now this we can't see. We can't see anything. Here's a blank chart. But look at this. I'm still getting readings, but now I have to go down in the market. And here we are, guys. We're here at today. So let's go ahead and widen that out so we could see what we're actually on to. Let's go back to our year to date. And our daily. It just has to kind of reset itself, right? So, yeah, there we go. I'm going to bring that up some more. This is the week. Right here. I'm sorry, this is the year. Right here. All right, so I just wanted to show you that. You know what? I think that is all we're going to do for today. I am 42 minutes into this, and I really didn't want to go that long. But here I am. All right, so we're going to end it here. We're going to call it a broadcast day. Thanks for joining. I'm Susan here at Studio 1209 at Investors Desk, building our legacy one day at a time.